live in a very unstable world, and unstable in many different ways. I mean, besides different financial crises, wars, struggles, terrorism, I mean, many things are happening all the time that have an influence on the geopolitical and economic happenings of any given country. The biggest, and I think most important from a straight financial standpoint, is the fact that many governments, the U.S. government in particular, are spending far more than they take in. And these deficits and debt are rapidly increasing. The only way to pay this debt down is inflationary. The governments basically have to create a scenario by which they deflate the currency, therefore the debt is a lot more bearable to them. Most countries are printing money with no backing. All of this will keep depreciating the value of the dollar. And we have a 200-year track record just on the United States of what the dollar is worth. And the reality is that a dollar today, is only worth pennies of what its purchasing power was when the first coin was minted. And the interesting thing is that wages have not increased anywhere proportion to objects, okay, or to, possessions, homes, or even, let's say, not a possession, but services like college education. Forbes does a remarkable study, what they call the wealth index. And the wealth index, year after year, goes up multiple times the quote, consumer price index. So the reality is there is a huge hidden inflation, and there's particularly an enormous hidden inflation to the wealthy. So the only way to overcome this is to have assets that are appreciating, at the same rate or greater. Now, stocks have done okay, real estate has done even better, but rare coins and even gold has done better yet. And anyone who does not have this as a fundamental part of their portfolio is making a huge mistake. The rare coin market has had multiple bull markets. The rare coin market is, graphically speaking, what you see is a peak, a decline, a higher peak, a decline, a higher peak. And it keeps peaking at much higher and higher levels. And pretty much the stock market does the same thing. The real estate market does the same thing. The only difference is the rare coin declines are not as great as the stock market declines, and they don't happen as rapidly where you can't get out. I mean, basically, during the financial debacle in 2007, stocks crashed. The Dow Jones from 2007 to 2009 went down by 50%, okay? Rarely does that happen in the rare coin business, and rarely in the gold. The most important thing is that when it's happening generally in the stock market, gold does the opposite. So gold is a countercyclical protection to your assets in the stock market. Now, recent studies have been shown that the real estate market tends to correlate much closer to the stock market than to its tangible brethren, gold. So many Americans are heavily invested in real estate and stocks. So what I say is if you have a huge position in real estate and stocks, you really have to have some diversification in rare coins or precious metals or fine art if you have the expertise in that arena.